Hey, this is Justin with DayTradeTheMarkets.com on November 28th, and I wanted to take a look at a few of the index markets, the E-mini S&P, the NASDAQ, the Russell, and just especially hone in on around the 10 o'clock Eastern time frame, looking at a few different time frame charts as well, to look at what, at that time there was some political, talk going on, and instead of trying to worry about what all the news means, let's just hone in on what the actual order flow or the aggression within the market was telling us. So wanted to do that and just look at nothing but the aggression bars. And to make a little bit of sense of that, we have various tools that we look at within our software and within this idea of how we try to make sense of the market. For this video, I'm not going to worry about the bigger picture levels. I'm not going to worry about the real-time support resistance zones that are formed or the filter with the deceleration bars that are formed. I just want to hone in on what we call the relative aggression bars, as well as a subset of that, which is what we call high velocity moves. And with those, and let me make a little bit more sense of that for you if you're not familiar, but we have three variations of buying aggression bars and three variations of selling aggression bars. And what this is telling us is that within a given time, there is either moderate buying aggression, strong buying aggression, or extreme buying aggression, or extreme selling aggression, strong selling aggression, moderate selling aggression. And it's really aggression that moves the market. So if you can hone in on when there's extreme or very strong buying or selling aggression entering the market, and then whether or not there's some follow through or there's some rejection, it can give you a very strong clue or edge as to the likely short-term market direction. So again, just to kind of clarify, just want to look in this video, I've taken everything off of the chart except for the high velocity moves and the aggression bars, just so that we can get in what we kind of call our first building block, we can get a pretty good feel for the short-term direction of the market. So with that said, let's just start with an E-mini S&P 500 contract looking at a 1 minute time frame, and I'll look at some other markets in a minute. And I really want to I know I've got the whole day here, but really want to focus in on this time period here, right around 10 o'clock Eastern time, which is when we had some news. You can see that at that time we had gapped down. There was some extreme and strong selling aggression that entered the market, and certainly that's good evidence, obviously. And so then we have to ask ourselves: is this going to continue? Do you want to get short? If you didn't get short in here, do you want to get short up in this area? There's a lot of things that we would want to ask ourselves in terms of how we're trying to make sense of the market. Now, with that said, you can see that there's the first sign right here, right on the low, that it was the prices at auction low enough to attract some aggressive buying. And it's a little hard to see again because I've got the whole day showing, but there's a level 2 buying bar there that quickly had its high taken out, and then that was followed by a level 3 buying aggression bar. We took out the high of this level 3 selling aggression bar. We had another level 3 buying aggression bar that came in. And you can see where these two bars overlap right here, kind of what we call our sweet spot trade. So that's an idea. But it's telling you at this time that prices again had auctioned low enough to attract some aggressive buying. And as we're getting follow through with these aggressive structures, it's telling us that some bulls are coming into the market pretty strongly. So what does that mean for you as a trader? That means, number one, it can help you avoid getting stuck short. It can help you avoid thinking this market's just going to continue selling off. It's actually giving you some evidence that at a minimum, buying aggression's coming in, and if you're thinking about the short side heading in, you want to lay off. Or if you're a little bit more aggressive, it's telling you some pretty strong buying aggressions coming into the market, and you may want to try to ride this wave and find an opportunity to get long, as we're seeing this evidence come in. I'm not going to talk about the different ways that we talk about getting into the market. I just want to talk about this first building block of what it's telling you. And then you can see later on the day we had a level 3 selling aggression bar that got rejected pretty quickly, followed by a level 2 bar, high velocity move, level 3 selling buying aggression bar, basically telling us bulls are very strongly in control of this market through the end of the day. So let's just have a look at another index market just to give an idea. Here is the NASDAQ market. Again, this is a 1 minute chart. I'll show some other time frames in just a moment, but it basically looks the same, especially around this 10 o'clock Eastern time frame, where we had some strong selling aggression coming into the market. Then we had this high velocity move off of the low with quick follow through, followed by another high velocity move, 2 level 3 buying bars, another high velocity move, rejection of a level 3, just on and on, where we actually had several of these overlapping level 3 situations right in here. Here was another right in here. That's really telling you that there's just really extreme buying coming into the market, and you would want to avoid being on the short side at a minimum and try to find various ways that we talk about in further building blocks, I guess you could say, of getting into and taking advantage of this pretty strong buying aggression that's coming into the market. So let's have a look at the Russell here. This is a 2-minute chart instead of a 1. You can use any of these time frames that you want. Similar idea where we had some selling aggression coming into the market. You can see then we didn't have an extreme or strong buying in the Russell that happened off of the low, but you can see when we took out this original wave of selling, we did so on some pretty extreme buying, and we just had continued follow through the rest of the day. Every time there was some buying structure, we had follow through. Anytime there was any selling structure, it was rejected. So same idea. It's telling us bulls are very much in control, so you want to be looking to get on the long side and avoid the short side. Okay, let's look at the let's look at a 5-minute chart here in the ES. Same idea, just on a little bit longer time frame. When this low is put in, it's made on a level 3 bar, no follow through. It's rejected, and it happens to be rejected on a level 3 buying bar that quickly has follow through, and away she goes. Same thing, all of the major, this is a level 2 selling bar that's rejected. Then we have a level 3 buying bar with continuation. It's just telling us, it's confirming what we see on the shorter time frame, that bulls are very much in control of this market. Same thing would apply on the euro. Here's a 3-minute chart of the euro. Same thing. I've got this a little bit earlier in the day because the euro is obviously trading earlier. Some selling aggression on the way down. And then off of these lows around the 10 o'clock Eastern time, we start getting some pretty strong buying aggression coming into the market. So again, telling us within this market, very strong wave of buying coming in. Avoid shorts. Be looking to get in on the long side. So I can keep going through charts and look at other things. I just wanted to kind of go through. I'm not going to do that right now because I just wanted to kind of give a little bit of a flavor of that first building block again that we talk about, which is the relative aggression bars, and that's what we look to really help us make sense in the short term of the likely market direction. From there, you can use the idea of what we call confluence, where you wait for these other clues to come in, and the more of these clues that you have, the better decision that you can make, the better the edge that you have when you have a lot of different pieces. We also have a lot of different trade entry ideas that we talk about. I'm not going to get into that in this video, but that's a further building block, and I can talk about some of those other trades in future videos. Or if you're interested, I can send you some of the documentation on some of the trade entry ideas that we have. If you're interested in that, just send me an email at info@DayTradeTheMarkets.com, and we can certainly get that to you as well. So hope you had a good trading session today, and we'll look forward to speaking with you again soon. Thanks.